What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto, the biggest bear in all of crypto right now, as far as I can tell. Today's date is May 25th, 2023. Everybody that I follow on YouTube and Twitter is bullish beyond belief. If they're bearish, it's to 25K and then it's up. I am bearish till below 10K. If you didn't see my last video, it's an hour long, but man, it's an hour of non-stop information, and you really should check it out. If you like the videos, please leave a like, leave a subscribe. If you don't like the videos, leave it a like anyways. Come on, man, help a brother out. But I'm going to show you today, because I'm always just on the chart. I want to show you today, maybe you're new to trading, maybe you've never done it before, maybe you want to pull up your own charts so you can verify what I'm saying myself. Go to tradingview.com. It's free. I have my own profile. You don't have to have a profile, but it sends you less ads if you don't have a profile. It doesn't time me out. Anyways, I like to go to BTC, USD. You know, this is all the Bitcoin charts and stuff. You can see it says all. You can click crypto, whatever. I'm going to click index, the all-time history index, and without any further ado, we're just going to jump into it. Your chart, if you're pulling it up for the first time or at any time, is not going to look like my chart. It's all customizable, and these are my features that I've customized. So let's just jump into it. My last video, I was talking about the potential for a zigzag pattern. We've already completed our A wave, which this is our A wave. 1, 2, 3, 4, and 5. This is a perfect textbook A wave. It's literally perfect. I would have liked to see the 5. I guess it's not completely perfect. Normally the 5 wave is a little bit bigger. But I'm happy with it, man. I am happy with it. It meets all the standards that it needs to meet. This is our, oh, oops, I'm choosing the wrong thing. I've got the wrong tool on here. That was our A wave. We've just completed our B wave, which is a corrective wave in the total wave, in the zigzag pattern. A, B, C, that is our B wave, the white, and then our C wave. We are in the midst of forming our C wave right now, actually. And I didn't draw that line perfectly, but it would be something like 1, 2, 3, 4, 5, yeah. And it probably won't take that long. This has us out in July of 2024. I very much doubt that it takes that long. In fact, we can move it maybe, maybe it'll be a little bit sooner, like this, yeah, something like that. A little bit, and then boom. And in fact, I don't think it'll look like this at all. I mean, it could have the biggest wave being the 5th wave, as long as wave 1 is not smaller than wave 2 or 4, which it is. But yeah, something like this. In fact, I bet this wave would come down a little bit. This one might not come up as high. Yeah, something like that. That might be more of what's to be expected. Yeah. Anyways, I know it looks wonky, but again, I have a whole hour video explaining that in the last video. I'm not going to go over that now. I just wanted to show you what the last video was about. And if you have questions on what that was, go and watch the video. Leave a like, and subscribe if you want to see more stuff. Today, we're talking about something completely different. It's something that I noticed yesterday, actually. I like to go through and try and notice similarities in previous markets and just compare them to current conditions. So I'm going to delete this long-term RSI for now because it's just noise. We don't need it. Let's make it simple. And let's see here. So I want to address, first let's just look at this RSI. It looks like a lot of lines, but I have a point. I promise you I have a point. We're going to use circles. I want to address this top, none of these tops, because they all came down. This one bounced off the 50. These ones all did not go near the 50, but this top led us below the 50. And that's what I want to point out. I want to point out every time that we've had a overbought, it's above this dashed line into this black zone, go from overbought to below the 50. Not from out of overbought, but below the 50 specifically. So from there, and then it went above the 50. We could call this a rejection and go there, but I'm gonna count this as a low. We're gonna use that as a low. Got another one here, but it doesn't go below the 50. Here we go, below the 50 right there. So we're gonna count that below the 50 right there. Up here definitely goes below the 50 afterwards. So, and this goes a little bit above the 50, but I'm gonna call that a rejection This one, not so much a rejection, even though it basically is, but this one to me is definitely a rejection. So we're going to use this low. I'm not looking at price. I'm not nitpicking. I'm just going off of what I'm seeing in the RSI. This one did go below the 50, but it didn't get above the dash line. We're having very specific parameters for this, okay? It needs to go above the dash line into the overbought zone, and it needs to go below the 50. Yes, this did go below 50, but I'm not counting it because that's support. It looks like support. This one went a little bit below, but we're not going to count that. We're going to count these obvious choices. We're not going to be nitpicky here. This is kind of a rejection, but I'm not going to count this because then I would have to count this. I'm just going to count this low. So we're just going to do that. Let's see. Yeah. Here we go. We're in the overbought zone again. I guess it would be from this peak here, not the first peak. And I want to count that as a rejection off the 50. I don't know really what to do. We'll look at price and see if it's comparable. If we get a reading that's like deviated from the standard, then we'll know to go to the second peak here. But if the first one's enough, then it's enough. Here we go. Here's this. Definitely below the 50 here. Above the dash line, just barely. Definitely below the 50 down here. And specifically what I'm measuring, and we're above it here. We're coming down. We are not below the 50, but we're looking like we want to. And this is why I'm talking about it, is because, oops, if on the weekly scale, this is important, we're on the weekly scale. If on the weekly scale, the RSI goes below the 50, we're going to compare what the price did in the past on these circles. So let's go. Here's the first peak that we had right here, first all-time high. I mean, I guess the first cycle high, technically. From the high to the low, this is the important part. We're going from the high to the low, and I would say this low here. I would say this low. Yeah, it's that low. Because it came back above the 50, we're not going to count it, so we're going to say 82% drop. Fair enough. Overbought below the 50 here. Let's see what we got here from high to low. I mean, technically the low afterwards was an 81% drop, but we're not. Let's measure from this bottom here. 75% drop. 75, 81, whatever you want to say. It's still a dramatic drop, right? This peak here, that's where it was. And then the low point that we got was here, 72%. Similar area, right? Getting less as we go on, but that's not the trend that I'm trying to point out. If that is the trend, we'll see. I don't think that is, though, if I remember correctly. So yeah, it would be this low here, 70%. Up. I have a point, I promise, bear with me. You're going to want to see this. You really are going to want to see this. And yeah, I guess it would be this high. This is where the, nope, it would be, yeah, it would be this high because this happened after the peak. So this high, and then to the low, you know, that's a 41% drop, and this, I think this was the one, that definitely looks like it rejected the 50, so we're gonna bring it down to the actual low, 50% there. It rejected the 50, so we're gonna go with that. 50% drop there. High point here, right? Because we're going off of this peak, not this peak. We're gonna go off of this peak. It's the peak in the RSI. And you know, really, we could go off of this because this price, this top in price happened after this peak. So I'm actually going to measure from the top there. And then to the bottom, the lowest price, I think, was here, 54.8. Looks about right to me. And then peak in price, right there. That's actually a little bit off. It's not the peak in price. And then to the low is right here. Let me get it. There we go. I know it looks like a bunch of jibber jabber, but stay with me, guys. Stay with me. I promise I'm going to make sense out of this. 50% drop, 54, 50%. These last three have all been very similar. I want to point that out. But here we are. Here we are at this point. We've already dropped from high to low 16%. We are not below the 50 on this line yet. And remember, that's the requirement that we're looking for. We need overbought and then crossing below the 50 and where it bottoms from there. We want the peak in the price after we've been overbought, after we start to turn around into the regular, out of the overbought zone. And we want to see, let me see. Yeah, okay, you guys can still hear me. Yeah, we want to see where it bottoms whenever it turns back around and goes above the 50. If this didn't go above the 50 here, if it kept going down, I would have measured this low, but it didn't. it broke above the 50 on the RSI. So we're not going to count this low. We're counting this low. Anyways, without further ado, let me explain what I'm talking about. The biggest drop that we've seen so far was an 82% drop. That was the first one ever. It makes sense the biggest move would happen early on in Bitcoin's life. Then we had 75, 72. It started to get a little bit more tame as time went on. 70% was the last drop that we saw that was above 55%, and that was in the 2017 bull market, from high to low, undeniably from high to low. Ever since then, for the last 3 iterations, we've had around 50% of a drop. 50. I didn't count this high. Ooh. Actually, I should have counted that high because that is the second peak. I did that wrong. I'm sorry. Sorry, people. So the lowest, and it looks like I was off on this one too. I'm sorry. Got to be accurate here. This is technical analysis. Let's get technical. Okay, there we go. This matches the numbers I did earlier. So 52%, 54%, 52%. And if we cross this, what I want to get to is the minimum. The minimum drop we've seen so far is 52%. 52.18 technically. If you watch my last video, you'll see that this bear market is unlike any other bear market we've experienced so far. It really is. Yes, I still believe we're in a bear market, and the rally also off the bottom, this rally here that we've had off of the bottom, the cycle's low so far, is the weakest rally that we've seen. The weakest rally before this, previous to this, was 198%. This one is 100%. So by almost 100% difference, by 50% of a growth difference, this rally is very weak. Would you expect a similar drop in conditions that are weaker to the upside, or would you expect a greater drop? Personally, I'm expecting if this RSI gets below the 50, it doesn't hold it as support, and again, it can go slightly below the 50. It's not, it can go slightly below the 50, but if it does not hold the 50 as support, before we get into the overbought zone again, we are looking at a minimum of a 52.18% drop. What would that look like? 52. Well, there's 52.33, so let's be kind here. Actually, let's say it doesn't do that. Let's go to 50. Let's give it the advantage here. Tie goes to the price action. 50. Oh, come on, I had it. 51.93. This would be the smallest drop in price percentage that we've ever seen in Bitcoin's history, from this model that we're looking at, and that would put us at $14,900. To put it in perspective, the current low, everyone's saying that this is the cycle low. The current low would be at $15,473. I firmly believe we're going below this price, but again, out of every iteration we've had, which has been so far, let's see, 1, 2, 3, 4, 5, 6, 7 iterations. Bitcoin is 100% on 7 iterations over 14 years, basically. 7 iterations. I guess actually it's 11. 2011 is 23 now, so 12 years. 14 years of its existence. 15 years. 7 iterations where it has been 100% guaranteed to go below 50%. 52% technically. Go lower than 52%. This isn't even technically a 52% drop. It's very close, but it's technically not. So if this line, I'll put another line in at 14,900 something. Let's just see, 14,900, whatever. Maybe I won't put in a line. You already know. I can just click on this and you can see right there, 14,923 on the price there. Again, this isn't a guarantee. Nothing's a guarantee, even though we have a 100% success rate of this happening throughout its history, throughout 12 years of existence on this chart. Even though we have that with 7 iterations, this could be the first iteration where it doesn't drop more than 20%. It doesn't drop more than 30%. If you watched my last video, you would see why there's a lot of other bearish things brewing in the markets right now, and I definitely think that this is a possible drop. But anything can happen. We don't have to go below this 50 on the RSI. In fact, it'd be really good if we held it and went up. It would be really good. It's exactly what the bulls for Bitcoin needs. But there's no volume coming in. The price action that we've seen is lackluster in comparison to any other pop that we've seen off of the cycle lows, which I say cycle lows. It's got the lasers, freaking sharks with freaking laser beams, because this is the week. I don't think that it's a cycle lows. That's why I do that. I really don't think it's the cycle lows. I got lost because I was doing my Dr. Evil there. If you don't know Dr. Evil, you need to watch Austin Powers, guys. It's a classic. It's a classic movie. Classic movies. Mike Myers at his finest. But the main point I'm trying to talk about is not to me. To me, it's obvious. It's obvious that we're going to go below this line. It's obvious. And at a minimum, I would expect us to go here. But my question isn't, are we going to go here or not? Because I feel like I already have my answer. And if you don't have your answer, if you don't think that's the answer, that's okay. We can disagree. But if you do think, like me, that we are going to go below this line, or you've been convinced from watching my videos or other people's videos with the potential that we are still in a bear market, my question is not, is this going to happen? My question is, do you think it'll stop here? Do you think after all this bullish expectations, after Bitcoin doing a bunch of things that are different in this bear market, yet people still deny and say that this bear market is just like any other, if we were to go lower than this, proving, validating, completely 100% verifying that this bear market is still on, that this bear market is different than any other, do you think that it stops there? Do you think with the weakest by almost 100% of a difference in gains, 50% less in growth percentages, do you think that with the smallest pump off of a cycle low that we've seen, that we're not going to have a strong dump afterwards? If the bulls are weak, that means what? The bears are strong. And I would assume that we are not going to see one of the weakest drawbacks from this. We're not going to see the weakest. The weakest drawbacks, again, happened after a very strong run-up, the all-time highs. That's when these weakest drawbacks all happened. This was not a very strong run-up. You can see it. And this is comparable, I'd say, to this over here. Actually, very comparable. Not going to lie, very comparable, other than the fact we don't have a double top. And it's not the all-time highs. You know, we've been going down for a lot longer. It's not the same market conditions by any means. I am under the impression that we are going to go lower than 50%, 52, 53, 54%. So what would that look like? If we disregard these 3 iterations and we go back to these 4 iterations, I think it's safe to say that we're not going to drop 82%. We're not going to drop 90 whatever percent, 93. You know, we're probably going to not drop that low. But the other 4, 75%, 72, and 70. So let's see what a 70% drop looks like. What does that at a minimum look like? And maybe by just a little bit. Maybe we go to like 65 or 60 even. Up would put us below 10 grand. And I do truly actually believe that we're going to go below. What is going on with my face there? We're going to go below 10 grand. And a 70% drop, by the way, without these like other iterations. I mean, to be fair, these were all off all-time highs too. So maybe I don't have a point there. Maybe it could go at least 50%. The main point I'm trying to make is, at a minimum, we can expect to see this blue line break. And truthfully, I think that off of this weak rally, where the bears are clearly in control still, they're going to show their control, and they're going to show it hard, and they're going to dump. They're going to dump real hard. I think that once we break this, with all the conviction that we've had over the past couple months of people buying and being convinced that it's a bull market, when they see that this breaks and that we are in fact still in a bear market, a lot of these bulls are going to sell. A lot of them are going to sell. They're going to wait because we're in conditions that we've never been in before. And it's obvious to me. It's obvious that we're in conditions that we've never been in before, but it's not obvious to them. What would make it obvious? A lower low. A lower low. That's all it takes. And when that happens, I don't expect us to bounce just below this line. I would expect us to drop further. I would expect a lot of pain to come into the markets. And we might even drop lower than that. We could drop, 76%, let's see, 75.4%, 82%, I don't think we're going to do that, but a 75.4% drop at the maximum, if we're looking at what's to be expected, that'd put us below 8 grand. And I could see that happening. I could definitely see that happening. It could go a little bit lower even. If it went to 82%, that'd put us below 6 grand. I really don't think that that's going to happen. We draw this line here. You know, I don't think that line's drawn properly. Yes, it is. Okay. You know, if we were to hit this line or go slightly below it even, that's a 78% drop. That's already a lot. I mean, 76% drop, somewhere in there. I could see that happening by October of this year, maybe not. So actually, if it were to touch this line by like the beginning of next year, that'd be a 75% drop on the dot. And I could see that. I could really see that happening. I could even see us going below this line just slightly. An 82% drop, though, I think that's out of the question, honestly. And a 50% drop, 52% drop is not out of the question. That could definitely happen. But what I truthfully think is that it's going to be somewhere in between this blue line here and this green line here. It's going to be somewhere in this little zone, and I'm going to delete this just so it's a little less noisy. Yeah, that's my expectation. So this is a long video. It was longer than I meant for it to be, but the whole point is this relationship to the RSI. When the RSI gets overbought and it crosses below the 50, not when it gets oversold, not when it goes below the 40, not when it goes out of overbought, but when it goes from being overbought to below the 50, that's what I've measured. And I've measured every price drop that we've had on the weekly scale, in Bitcoin's history. This is the BTC USD index. It's got the most historical data. You know, it says all-time history index for a reason, and that's why we looked at it. So 7 iterations so far, 100%. That they've all dropped at least 52%, if not more, at a maximum of 82% from the high. So that's not from the current prices. Again, that's from the high. And the high so far was at about 31,000. So a 82% drop, which I doubt would put us below 6 grand. A 52% drop, which I also doubt. I think it'll be more than that, but a 52% drop would put us just below 15 grand, around 14.5, something like that, you know. Yeah, or I guess 14.8, 14.9. That's what I got for you guys. So, yeah, something to pay attention to. It hasn't happened yet. We are still a decent ways. You know, we're at 53 right now. It seems close, but I mean, you know, right here, we got close here, but we bounced back up. And to be fair, like we went to similar areas over here. It's different structure completely and different market conditions, don't get me wrong, but we don't have to go to the 50. And if we do go to the 50, we don't have to cross it. We could hold it. And if not, that's just another thing to tack onto the list of bearish things that I've already tacked on. So, and if you don't know what I'm talking about, you really need to watch my video that I put up yesterday. I don't remember what the title was. Let's actually look and see. YouTube. Miss Rachel. I have a toddler, so we watch Miss Rachel. This one. Bitcoin price analysis, beware the zigzag, #bearish. That's the video I think you guys really want to watch if you want to get more information as to why I'm so bearish. And it's not opinions, it's all facts. The opinion is that it's going to drop lower, but everything else is a fact in there. I only go over the facts. I only go over like what I literally like am going over it and teaching you, learning with you on it even, you know, so it's not opinion based. The only opinion that is in this whole video is that I think we're bearish. I think we're going to go lower. And I give my reasons for that, which are all factually based. So anyways, go watch that if you haven't already. And if you don't want to watch that and you just want to watch this video, at least leave a like. Subscribe if you'd like. You want to see more videos like this. And I will see you guys soon. Ta-ta for now.